Palantir versus Snowflake. Guys, Palantir has been a big topic of conversation on this channel for a long time. Last year, I was making fun of that other YouTube moron who was pumping Palantir at $40 a share. And I said, hey, I'm interested at $5. He said I was stupid. Fast forward, all of his stocks are down 1 billion%. I have stocks that are down too, because even though, Mike Trout's a great baseball player, he can tell somebody they're going to strike out a lot. Doesn't mean Mike Trout's never going to strike out. But either way, Palantir is now a lot more attractive to me. So a lot of people have asked, hey, what about Snowflake? So we did a little bit of a dig, not a huge one, but we started looking at Palantir versus Snowflake. My understanding is Snowflake has an investment from Berkshire Hathaway.
Oh, that's right.
I don't believe I'm not saying it's a direct investment from Warren Buffett. It likely is not, but he has his guys who invest for him and he trusts them very much. So let's just pull up Palantir and Snowflake. I'm going to start with Snowflake on our software here. So 1 year, we had a high of 398. Ooh. 405 and a low of 112. It's currently at 177. So it's below its IPO, much lower than its IPO right now.
That's disruption, all right.
Disruption to the max. I mean, big growth. Look at these growth numbers. So you look here, this last quarter, ending July 2022, they did $500 million in revenue. The previous July, they did 272. The previous July, 133. So almost 100% growth year over year for the last 2 years. That's pretty incredible. So what do these companies do? Like Palantir's big thing. They've been around since 2003. They basically say to you, what problems do you have as a company? I'm very much making it very minimalistic of what it is. Yep. Let's use all your data to try to figure out solutions to these problems. Now, Mo, you started looking at Palantir versus Snowflake. What'd you find from a business operations standpoint?
So from what I could see, Palantir is more of the file storage, the hard copy, you have it, versus Snowflake, which is more your conventional cloud-based storage now.
Well, isn't it funny that you said conventional for cloud-based when that's actually, if you go back to 1990s, it was all
totally different.
Yeah, I mean, to me, so some people, so here's the argument for and against that. Yeah. Go ahead.
Well, I just remember when Dropbox first came out, that was one of the first cloud-based, and I started using it, and people were like, you're crazy. You shouldn't be doing that.
Well, I remember in 2001, some old guy looked at me and said, you buy stuff online from Amazon? I go, yeah. He's like, don't they steal your data? And I was like, no. But so the differences are, according to this, Palantir doesn't do anything in the cloud. Is that more secure, less secure? Well, if it's in the cloud, it's more likely that somebody can hack it, etc. But it's also backed up there. So, I don't know Peter Thiel personally, but he's a founder of Palantir. And I got to think there's a specific reason for security purposes. They want you to keep your data on your own file storage.
Yeah, and I'm not sure. Does Snowflake have contracts with the government?
I don't know. Let's look it up.
Because Palantir has just under 50% of contracts with the government. I have to think that they're more secure if Snowflake doesn't. Now, ease of use, this article says it definitely goes towards Snowflake for ease of use. Palantir is generally going to be more difficult to use.
Okay, so when you say difficult to use, what does that mean?
I think, from what I'm gathering, Snowflake seems like it's more targeted towards consumers.
Well, they do have federal agencies and state and local government. Effortlessly modernize your IT. This is their website.
Okay.
Revamp legacy systems and services, collaborate with data seamlessly and securely. I mean, they do the same thing.
Okay. Do the same thing in a different manner, kind of.
Yeah, listen, and some people might sit there and say, oh, you've got to understand. Yeah, I get that. I look at it, and this is the method that I use. I want to look at their numbers and look at them and say, hey, do I want to spend more time researching what they do and why they do it better or why they do it well? Like with Palantir, you look at the things they've done for 18, 19 years and you go, hey, it's pretty interesting things over there. Now, does that mean that Palantir is going to be, the biggest company in the world? No, but when you look at their numbers here and you sit there and say, so look at Snowflake, $56 billion market cap, 34 times sales. Okay, let's look at Palantir. Palantir is $16.5 billion market cap, 9.5 times sales. 9.5 times sales is closer to what other software businesses do that don't have a ton of revenue growth potential. Like Microsoft is probably 6 or 7 times sales. Let's see where Microsoft is at. Nope, Microsoft's at 9 times sales.
Okay.
So I look at this, but who's more secure? Microsoft's more secure in the sense of what business is going away.
Right.
But who has more growth potential? I mean, let's look at the analyst estimates for Microsoft. They have revenue growth potential for the next 2 years of low double-digit growth. Palantir, Let's look at Palantir analyst estimates are. I mean, well over 20% revenue growth potential, and that's a big difference.
Snowflake is double that.
Wow, look at that.
50%, yeah.
Okay, but Snowflake needs to get that in order to justify that massive price to sell. So when a company isn't making making money yet, which by the way, Palantir just started generating free cash flow. But Snowflake, when a company, one great way in which to figure out what their value is, compare it to sales. Because if you're spending a lot of your net income and your free cash flow growing, it's going to skew that number. But a good way to see whether a company in the industry is going well compared to other companies in that industry. So I look at Snowflake and Palantir, and I say, okay, why is one at, what's the price of sales on Snowflake?
What did we say?
Go to 35 or 50, 35.
35.
And Palantir is 9.5. 9.5. Okay, yeah. Snowflake has more growth potential according to analysts. Is it worth 3.5, 4 times more? I don't know. And that's the question you have to ask yourself. Now, what about dilution, Mo? What's the dilution on, oh boy,
let's see here.
For Snowflake?
Oh boy, is right. I mean, oh my goodness. Just in 2020, January 2020, 238 million shares outstanding. Today, 318 million shares outstanding. That's a lot of dilution. What's that percentage?
A lot.
A lot is right.
Palantir has slowed down its dilution. Like I look at this year. Last year, they ended with 1.89 billion shares. This year, 2.05, which is a lot slower, which is great because they're generating the cash flow now, is my guess. So the cash flow on Palantir.
Snowflake does have free cash flow.
Oh, they do?
Yeah, 292.5 million.
Oh, great.
Yeah.
Okay, look at free cash flow for Palantir.
It's actually
260.
Less. Yeah.
It's actually less. Interesting.
Mm-hmm.
Income statement. Let's go 4 quarters. Negative 539. What's Snowflake on net income? And actually, Snowflake has higher revenue too.
Negative 675.
So Snowflake has higher revenue too.
It does, yeah.
Nope, not higher. Sorry. I thought it was.
1.64 billion?
1.74.
Okay.
So listen, these are very similar companies. So I look at it going, all right, to me, it comes down to which company you like more, which one has better growth potential, right? I just look at this 9.5 times. What's the stock at right now? What's Palantir stock at? $8.07. And full disclosure, I've put on Palantir at much lower prices than $8. Is it, 7? No, it's lower than 7. But what I'm looking at is saying, listen, this company's growth potential. Let me go into stock analyzer tool. And I'm just going to sit here, and the hard part about when you see a company with no earnings and we don't have a history, you've got to make a lot of assumptions. When you make a lot of assumptions, that's okay. But what you need to do then is make sure you have an ample margin of safety. That's the desired return here. When we're doing our desired return, you've got to go higher and higher and higher when you're making a lot bigger assumptions, right? We don't have a track record on Palantir to say, here's the profit. Here, look at this free cash flow, 14.9%. That's low for a software business. Let's pull up Microsoft and we'll see what Microsoft's free cash flow margin is 33% last year.
Double.
Over double.
More than double.
So you sit there and go, and guess what? Look at Microsoft's gross margin. Their gross margin is 68%. You ready for Palantir's? Gross margin for Palantir, 78.7%. So a higher gross margin. This means every extra dollar they sell, 78 cents of that goes to the bottom line, which is higher than Microsoft. Yeah. What's Snowflake's gross margin?
Let's see, gross margin, 65%.
Okay, so there's pluses and minuses for each company. This is where the art of investing comes into play. And I'd love to be able to sit there and say, no, this one's the best one. But if that was the case, I would put all my money into one stock if I knew exactly what's going to happen. I believe, personally, in buying a portfolio of 20, 30, 40 companies that fit a certain criteria. Some are the Palantirs of the world, not many of them. I prefer companies that are larger, that have established business. But Palantir is very interesting to me because 1, I believe in Peter Thiel. And 2, I look at their growth potential. I'm saying, listen, data is the future. Data is now and data is the future. As time has gone on, data becomes more and more important. And these are 2 companies that are doing a great job in that. By the way, you can buy both companies if you really feel like these are the 2 companies in the industry and let me make a bet. And maybe one goes up 30 times and one goes to 0. And you're like, okay, you make your money that way. I don't know. These are options. So let me go to Palantir on the stock analyzer tool. I'm going to do a 10-year analysis. So 10 years is a long time. I'm going to go 15, 20, and 25% revenue growth. For profit margin, I'm going to do 15, 22.5, and 30. Free cash flow margin, 15, 22.5, and 30. Now, the reason I'm doing this, remember, they haven't hit profitability yet. So I can't give them, this model says, hey, they're going to be profitable day 1. So I have to account for that a little bit with a lower profit margin. PE, I'm going to do 15, 18, and 21. 15, 18, and 21. Now, I do believe I'm butchering this with a 15 PE because in 10 years, I think this company still has a lot of growth potential.
Right.
And if they dominate, they're going to be really valuable and have a lot more growth and it can justify a higher PE. Right. But again, my goal is to be conservative today, make assumptions today, and see where it falls. So desired annual return. Guys, you're going to laugh at this one.
It's got to be high.
Yeah, I'm going to go 14, 17, and 20% because these are big numbers here. 25% growth margin, 25% revenue growth, 30% profit margin, 30%. I mean, this is basically saying it's going to be like Microsoft. in terms of profit margin and free cash flow.
Right.
Okay, so again, I'm hitting the analyze button. We're going to do Snowflake next, so make sure you stay in this video and watch the Snowflake one.
Current price $8.
Current price $8, but we have $350 on the low, $11.25 on the high, $6.63 on the middle. This is why when it was 40, I was like, this is absolutely nuts. So I look at the saying,
and it was even more speculative when you were at 40.
Oh, that's what I mean. It was crazy.
It was even worse than
so,
this.
if you watch our past Palantir videos, I said it'd be interesting on 5. In disclosure, not full disclosure, but semi-disclosure, my puts are below this price. I may never get those shares. So when I sell a put, what that means is I'm selling somebody the right for me to be forced to buy the stock at a certain date at a certain price. It's below this. So let's say, for example, it's at $6, my put. If the stock falls below $6 on the expiration date of the put, I'll be forced to buy the stock for $6. But I'm okay with that if I believe in the company. So I sit there and say, this is a very speculative play.
Yep.
But it doesn't mean I'm out of it. It just means it's a speculative play. Right. Now let's go to Snowflake. Now, Mo, since you've looked at it more, I want you to give me your numbers on the revenue growth, profit margin, et cetera.
So revenue growth, do 25, 30, 35. Or is that range not wide enough?
I don't think that's a wide enough range.
Do 20, 30, and 40.
Okay. So 40% revenue growth for the next 10 years. What's the revenue right now? 1.7?
Yep, 1.6.
Which takes it $50 billion in revenue. I don't think that's I mean, it's a lot.
It's a lot, but it's not 1.3 trillion or something.
Yeah, exactly. It's like, okay, there's a way that it gets to that.
Yeah.
Okay, next one, profit margin.
Oh, I don't know about this one.
That's a problem, guys. You see this? This is the problem. We have negative 41% profit margin here. It's hard to determine that.
I don't know, 20, 25, and 30?
I think that's reasonable.
Same thing for free cash flow. And why don't we put in the same PE that you used on?
So 15, 18, 21?
Yeah.
Is that what I did?
Yeah, I think 15 is low, but that's okay. Let's try it.
And what about desired annual return?
I think same thing. 14, would you say 14, 17, 20?
Yeah, I think that's what I did.
Try that.
Analyze button. The stock is currently at 178. Now remember, guys, this video analyzes Palantir and Snowflake, and our analysis is always changing depending on what mood we're in. All this stuff. The whole point is, so yesterday I was doing a stock, and somebody else I was talking to was analyzing the same stock. They were texting me, one of our Everything Money community members. And I said, well, what assumptions do you make? We made different assumptions, but our price was pretty close to the same thing. And that's what we do here. Our goal isn't to sit there and say, hey, this stock is selling at 300. One second I'm coming up with a $100 value. Next second is 250. No, maybe sometimes I'm doing 100. Sometimes it's 125. Sometimes it's 90. The point is, it's about sitting there saying, this is too far away from me.
Yeah.
And when it gets closer to my price, I then decide, go do more. So I want you to watch the next video, which is our previous talk about Palantir, because it'll allow you to see our process and how the process is consistent, but the results may vary just a little bit over time.
Right.
So hit the analyze button. Stock's currently 178. Drum roll, please.
$40.
Okay.
Is that
low price of 40, high price of 190, middle price of 90.
Okay.
So we got a long ways to go before we even, unless you believe these absolute high assumptions right here, which by the way means that tomorrow they're generating 30% profit and 30% free cash flow. That's the only reason you're buying it today, according to these numbers, because every investment's the present value of future cash flow. Thank you very much for watching this video, guys. Have a good day.